Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, January 30th, 2023. I am Frank Ochoa, aka PivotBoss. Happy Monday, everyone. Here's a look at the daily time frame of the ES. You'll notice right now the ES has trended higher throughout the month of January and finally reached the FOMC key level from December 14th, that 40.85 FOMC key level. Taking basically the entire time, 6 weeks, to go back down and back up ahead of this week's FOMC meeting, which we have Tuesday and Wednesday. On Wednesday, we'll get the FOMC statement and the rate decision, and then later on, we'll get the press conference to follow. Wednesday could be a high-range session. Thursday could be a high-range session as well. And then on Friday, we have NFP. So we have quite a bit of potential headline risk coming up here later on this week. This market right here has gone through the previous month's midpoint and is approaching the previous month's high price and the previous quarter's high, which are one and the same. Inflation day there the day before FOMC day in December. So we might still see a little bit of upside that could take us to that zone. But this week we might settle into an early narrow range over the course of Monday and Tuesday, heading into Wednesday's statement, and then Wednesday we'll begin to see a bit of volatility in the afternoon into Thursday and Friday into the weekend. This can also trigger volatility over the next 1 to 3 weeks very easily. So again, we'll get ourselves another FOMC key level at the moment, still trending up with an upward bias, and this market still being able to shake off early weakness. And right now, we're currently seeing price action below the previous session's low. If price can push back above the previous session's low, it wouldn't be surprising if we quietly push back up toward the previous week's close price. As of right now, trading within the upper half of last week's range. We take a look here at the NQ. Similar price action, a pretty heavy pullback in overnight trading and pre-market. We've gotten that pullback, but again, this market has been able to shake off weakness either intraday or even after a couple of sessions. This thing's just been able to elongate to the upside. We've seen this thing push through 12K. It's currently above the 200-day moving average and very close to reaching the previous quarter's high and the previous month's high. Now that's the upper end of the range up here. Right in this zone, the lower edge of the range is here. The middle is around 11.6, and that's been our distribution here lately. So we've seen a lot of price action in here. We've seen some in here. We saw some here. And recently we've transitioned across the range. Typically speaking, once you reach the edge, you tend to come back and you may stay in this range for a while. So we'll see how it plays off once we hit the edge, or should we hit the edge up here. 12.4 could provide an opportunity to watch for rejection and perhaps a rotation back toward the center of this larger range. So keeping an eye on the edge here for the NQ. Taking a look at crude oil. This one's down 2% right now heading into the session. We've seen this thing develop a narrow range at these highs. 1, 2, 3, 4, 5, 6, 7, 8, 9-day narrow range. It appears as though we're getting the initial downside break right now. Let's put a 9-day range on this one, and we'll quantify that range right now. And so what you'll see right there is a compression here at these lower edge, with the potential to see about 9 points of range, 9.25 points of range up ahead. That's the range right there, these 9 days. Today is the potential breakout day. We are breaking down. It could become a failed breakout as well. A failed breakout is if by the end of the day price is back inside the range and say at $80 or better. And that would give us a failed new low rejection, and that could suggest that we're about to break to the upside. But if we close the session with a breakout or a breakdown here like this, if we close the session down here at these lows or lower, then that could suggest the breakdown is coming. And from the high of the day, the high is 80.49, so call it 80.50 minus 10, that puts you at 70.50. 70.44 is this FOMC here, and recent support, that would be a 10-point move from that high, the breakdown high, to this point, and that takes you to the bottom of this trading range. So this narrow 8-day range is getting the initial downside break right now, the quantification of which leads to an 8 to 10 point move up ahead, 9.25. So that puts you somewhere in this lower edge between 70.50 and 72. So right there could be a good target if today indeed becomes the breakdown day. All right, taking a look here at gold futures. Gold remains very bullish, highly directionally bullish. Every pullback, whether it's intraday or a one-day pullback, is a short-term buying opportunity for a rotation back up. But this market's been very quiet here at the highs. Very, very modest uptrending channeling behavior, but still very directionally bullish. As long as this thing remains above 1900 right now in the very near term, the expectation is for further strength toward 2000 up ahead. Lastly, taking a look at the YM. YM is down just about 0.5% right now, but off the lows of the day. This thing is trying to recover the previous session's low. Again, this market being able to shake off weakness lately. Even this big 3-day pullback, it was able to shake it off and bounce here over the last week of trading. So any failed new low right now could suggest strength here into the rest of the session, or perhaps back to the previous week's close price, 34,049s. We could be looking at a continuation higher toward 34K as well in the near term. Obviously, with FOMC up ahead, at some point here we'll find our range for the early part of the week and likely go range bound heading into the FOMC statement and rate decision Wednesday afternoon. Right now, this thing's still stuck within a multi-week trading range here. This is a narrow trading range seen in the daily time frame, also the weekly time frame, but this is building significant energy in the weekly. The weekly time frame suggests a breakout move north of 4,000 to 5,000 points up ahead, but we could see further development until that breakout occurs. Perhaps Wednesday or maybe NFP Friday could trigger that breakout. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.